Have you wondered what financial advisors actually think about finances? This is your sneak peek at the conversations within Financial Design Studio. Michelle Smallenberger, the CEO here, will be your host as you go behind the designs.
All right, welcome back to the podcast. I have Steve Smallenberger here with me today. He's our tax specialist. And I'm Michelle Smallenberger, the CEO and a financial advisor here at FDS. So you have the Smallenbergers. Welcome back, Steve.
Double team.
That's right. Steve has finished tax season, so he's out. He's free now from behind the screen.
Spring
How does
break.
it feel?
It feels like spring break.
Summer break.
Summer break, sure. It's like finals just ended. You're all done with all your exams and tests. Now you have some freedom.
Exactly. So I heard this recently, Steve, at a conference. Tell me if you agree. Someone was like, I'm putting all my money on taxes. The one sure thing to go up.
Sounds pretty right.
So it kind of sounds like an investment, right? I'm putting all my money in taxes. The one sure thing to go up.
It sure seems to. Yeah.
Well, that's what we're going to talk about today is actually things you've noticed in tax season. We're going to shift into now it's tax planning season for the rest of the year, but then also why that matters. But just kind of some behind the scenes. What was it like? So just kind of describe to us, I guess. You've just finished tax season. It's been a couple weeks, maybe a week and a half.
Yeah.
What is tax season like for you as an accountant, preparing, filing?
Yeah, so tax season for me kind of starts right after New Year's. It's getting the software set up. It's getting all the processes in place, things that I've been thinking at the end of last year. What do I need to have in place? Buying the paper, buying the ink, getting the software, having all the processes, having the team ready and coordinated. And then it's really through, this year was April 18th. And normally it's the 15th, depending on holidays and weekends. But yeah, it's a mad rush. It's, as I describe, if you were to ask what is tax season, it's project management on steroids. How do you handle a couple hundred tax returns coming in at different times, different amounts? Some people email, text, Facebook message, fax, like things come in all different methods, getting it to the point where how do we prepare the return? How do we communicate that to the client? How do we get them what they need and then get the return filed? Yeah,
I think I'm always amazed at some of the things that, I mean, I see you go through this every year, you know, like the filing, the prepping, all of this, and having to get information in. And I know we try as much as we can to help. Oh, someone's going to drop something off. Okay, Steve, we'll scan it all in. But even I think this morning as we were talking about this, and we were talking about how, like, you want to keep your tax return safe, essentially, your social security number. So some people have PIN numbers set up through the IRS. And I think I was surprised. And you're like, yeah, we have multiple clients who have this. But I think I was surprised that I didn't know that. So you prepare the return, get all the information, enter it, make sure it's right. You're looking for any areas that clients could save more money. So things you know about them that you're asking, you're trying to ask all the questions, make sure they're sharing anything you don't know to get them the best result. And then it's like, okay, you go to hit send. Oh, wait, I need this PIN. And so it's just even little things like that you have to do.
Yeah, there's the whole just get it to the point where it can be finalized, and then the whole e-file submit. There could be rejections for various reasons, or we've sent the return, it's been accepted, refunds or balances have been paid, and another document comes in. Yeah. They get a late K-1, a reissue 1099. So it's not done even when you think it's done.
Yeah, no, that's great. And for everybody out there that does their own tax return, they're like, yeah, I know. I do this for myself every year, but now multiply that by...
They can be surprised too.
A couple hundred, exactly. Yeah. So it's definitely a process, and this isn't the only thing we do. So for us, this is like a point in the year. It's one thing we do while everything else is happening behind the scenes too. So this is really something you take care of, and then we help where we can. So
exactly,
kind of your specialty. So let's then shift into, I know we've been talking about, as any good business owner would, what are things you noticed? What can we do better? Things like this. Why don't you just share with us some of the things you noticed, this tax season versus last year? In general, I would say this tax season for us was better than last year or the year before. We track a lot of information.
There's tons of data data that we're keeping track of behind the scenes for operational efficiencies.
Yeah.
And each year it's a building block. We're getting better, more efficient, just looking for ways to improve. And that's happening. But yeah, what has happened? What am I noticing? So for us, this is non-client facing. So the client wouldn't be aware. It's when's the first piece of data come in? When's the last piece of data come in? When is the return completed? How is it sent? How do they provide that information? So just looking for any areas of patterns, ways that we could improve. How is the duration of the return? Is it meeting standards that we want to meet? For example, is it done in 3 or less days? Is it taking 7 to 10? For those that are maybe over 14 days, what can we do to either help that client in the future or improve something internally?
No, that's great. I think it just like the reason that we want to keep track of some of this information is so that our clients have the best experience they can. And so that they're finding, hey, I get them stuff, and then we turn it right around when we can.
Yeah,
so,
a couple business
helpful.
sayings, know your numbers. That's one that comes to mind. Or another one is if you don't measure, you can't improve.
And it's been cool, too, over the last several years. I know we did a blog post on this last year this time, but just kind of showing like the change over years, like in COVID, the tax season was longer, things like that. But we noticed people taking longer to get us information, which may not necessarily be on
It could
them.
be various reasons.
Exactly,
yeah.
which I think is a great segue into some of the things you noticed. So I'll let you kind of start to share with us what were some things that you noticed from this tax season in general, from the past.
Yeah, general observations, nothing client specific,
Yeah.
is 1099s from custodians tend to come out later and later every year. And that was true this year. Not just one custodian, but kind of across the board. So 1099s came out later. Even when they came out corrected, meaning there were multiple versions or reiterations because the underlying data had to be cleaned up or re-reported in another way. We saw more balances due for various reasons, meaning clients had tax liability payments that were owed when the tax return was done. That could be for a number of various reasons, not only negative, but some positive. Some of the negatives were under withholding. Just they didn't. There was a change in their compensation. They didn't adjust their withholdings. There was maybe a phase out because they're at higher income levels. Raises, that was a real key one. A number of people got promotions or raises or a second job, and a number of home sales and change of residencies.
Yeah, so it's interesting. Even like the credits went away, right, or phased out.
Yeah.
This year that didn't last year.
Yeah, so then a couple things. There was a higher child tax credit a couple years ago, so $3,000 or $3,500, depending on the age of the child. That was reduced to $2,000 this year, or back to $2,000, which it's been at for years. We saw clients who now have older children in the home, older than 17. That child tax credit's no longer $2,000, but $5,000. So sometimes when they owed, it was because they lost $1,500 of a credit, which directly impacts the bottom line. That was another one. Sometimes it was because of their promotions, second job, or raises that they were phased out from certain things, either their charitable giving or an exemption amount. The Illinois property tax credit because they were over the $500,000 threshold. Some other positives, though, we're seeing a number of clients because they're charitable or charitably inclined. They're still able to itemize, even though the standard deduction has been increased. EV, electric vehicle tax credits. Some people purchased electric vehicles, were able to take that credit. Yeah, lots of things, including even some mistakes that we found from new clients bringing their tax return in from a prior preparer the year before. Just finding some easy misses, like not picking up the most recent child that was added to the family, or something with a retirement. Either a contribution wasn't reported or a distribution was reported incorrectly. So some ways that we could add value day one.
No, I think that's like a ton of stuff, Steve, that you just shared. I mean, I know you just kind of rambled them off, but I'm just thinking, right? Rambling. He's rambling and rambling. Spouses everywhere listening.
We're trying to fill a podcast, Shell. Come on.
Oh, love is in the air. All right. Okay, let's bring this back to order. Okay, so I'm thinking, like, you just very eloquently listed this, list of all of these things that impact like the outcome of a return, right? And so some people, whether they owed more, had a smaller refund, there was some result. And you're mentioning this because you kind of saw like a large increase from the last year. So while last year there might have been more refunds, and these are things that we kind of knew. So when we were doing tax planning, we knew that the credits would change. We knew that some of these people would phase out. So a lot of clients, when we're doing tax planning, we can plan for this stuff. But if not,
and it was communicated in advance.
Right, exactly. Yeah. So I'm just thinking of how we never want there to be surprises. And so it's just really valuable, I think, for you even mentioning these things, because if this is someone, who still does their own return, these are things for them to remember. And there's also so much that that you have to know where to put it. So let's say you're doing backdoor Roth contributions, you're doing qualified charitable distributions. The tax return doesn't say, here's where you put that number. Like, you have to know then where to put it on the tax return when you're actually filing it to really get the benefit of the strategies, right?
Exactly, yeah. Some of these I listed off. You mentioned one, like the qualified charitable distribution, the EV tax credit for the vehicle. You may or may not get an actual 1099 or a tax document or even a receipt in some cases. You just have to remember what was done in order to report it correctly on the tax return. And even when you do get a tax document, the qualified charitable distribution, that's people giving charitably out of their IRAs after they're 70 and a half. So even when they do that, the 1099 doesn't say, oh, remember you gave this much to this charity. It doesn't. It just says, here's the money you took out of your IRA. Yeah. It's on you and or the taxpayer to basically notify or inform the tax preparer to report that.
Yeah, or kind of prove it, like prove that this is what you've done, right, to get the benefit. Yeah, and I just think like these are just the pieces where even clients that maybe we do all the planning, the investment management for, but we always say, like, if you have a professional that you love to work with, so if your tax preparer has been doing a great job, like, we never say, well, we want to do everything. So we, that's fine. Like, you can keep working with them. And these are the things that even when we know they happen, because we know that the accountant wouldn't know that unless the client's telling them, like, these are things that we tell their accountant. So we're letting them know because we know it's important that they get the benefit. So this is where, like, we work collectively with the professionals to make sure that it's done. So
or even internally for us as we learn about something. Like right now, if someone were to say, we bought a new vehicle, we opened a new account, we did this, we're having these ongoing client notes, but they're also getting tagged in the software for next year, so it's not forgotten about. So there's constantly, it's not while tax preparing is seasonal in the sense it kind of happens in a window, tax planning and tax preparation kind of in congruence with it happens year round.
Wait, tax planning is a sport. You have to practice and prepare for the actual game time, right?
It's true.
Okay, all right. Cheesy, I know. I think it's great. All right, so this is really helpful, though, just for everyone to kind of, I think, get your perspective of what you were seeing, what you were noticing on a larger scale, because now they can kind of go back and say, well, wait, did this impact me? Did I notice that? Or maybe just things that might affect them in the future. So it just is making them aware of what's out there and what we're seeing. So that's really helpful, all of those notes. And I know you just kind of have like a notepad, right? So all tax season, you're just like continuing to take notes?
Yeah. So on my desk right next to my keyboard is a yellow notepad where anything that comes to mind, how do I improve this for next year? How do I improve this for this year even, is written down and implemented often.
All right. Everybody out there saying a yellow notepad, type that in. We know there's like all these efficiencies, right? But no, I think it's just helpful the way that you're tracking stuff so that we know
Trying
we can
to be mindful.
plan.
Yeah.
Exactly.
Yep.
No, so that's, no, that's helpful. All right. So that's helpful to know kind of what you noticed, what it was like. And I just want to kind of shift. We always say here that it's always a great time for tax planning and, taking care of that. So like it's never a bad time. And so just kind of shifting into that, because now that tax season is behind us, it's okay, well, now what should I do? So people have just found out I owed or I got a refund and I need to change something because I got maybe a larger amount of either of those. And so that's where obviously those people would want to do some tax planning to make some changes. So just kind of a general, how would people get started, or how would you tell them, okay, here's kind of what that process looks like when we were doing tax planning.
Yeah, so even when people ask what is tax planning, it's kind of even backing up and explaining what it is. I like to use the analogy of a vehicle. So you have a large window or dashboard versus a small rear view mirror. That's because you're always looking forward when you're driving a car. You're rarely looking behind you, or you're not looking behind you as often or as much. That's the same way tax planning is. Where are we going versus where have we been? With tax planning, it is where have we been, where do we think we're going, and what's going to change between now and then. So with tax planning, what was last year? What was that situation? And then what will next year be like? Could this year be the same as last year? Absolutely. But there's often changes in the interim. Maybe a change of job, a change of location, and a change in the family. Even a change in expenses or credits or deductions.
So it's kind of like people who are starting. So let's say you're starting your tax planning and you're trying to figure out if you need to. So you just mentioned, a lot of people, some people may not have any changes throughout the year. You stay at the same job, very similar income. So there's maybe not much change that needs to happen versus someone who does have a lot of change. So it's almost like if you're expecting changes, or you've already had changes during the year that would affect income, that would affect tax return things, moving, things like that, having children, then for sure you would want to be doing tax planning.
Okay. Another one that comes to mind is, are you employed versus are you self-employed? So very different kind of planning opportunities within those two categories. If you're employed, are you taking advantage of all your employee or employer benefits, 401ks, HSAs, things like that? If you're self-employed, what opportunities do you have available to you? What deductions are we trying to claim? What expenses are there? Are there abilities to set up retirement accounts for your own business?
So this is probably a good point. If you don't believe us that tax planning is important, we have a tax downloadable that you can grab, and we're going to put it in the show notes, that you can actually see. What we've done in this tax downloadable is to describe what strategies that a lot of our clients are using. So high income earners, corporate executives, near retirees. If you find yourself as one of those people, there's strategies in here, common strategies that we are using with clients in tax planning. And so in this downloadable, you can actually see what is the benefit of doing these things. So we've really tried to say, kind of prove, here's the dollar value difference. So we put some examples in there. So that's just something, if you find yourself as, hey, this is helpful. I do think I need to do something because there's been change. That is something that you can go grab. Encourage you to download that. So tax planning, if someone's starting now, that's great because they have the rest of the year to really, if they say, well, I need to withhold more or I need to withhold less, this just gives them the ability to actually make those changes over a longer period of time. So now, if it's basically, if they have to withhold more, for example, that's less that has to come out of their paycheck over the remaining months. Whereas if they wait 4 or 5 more months, that's going to be more if they're going to withhold more in a short period of time.
Exactly, yeah. With tax planning, you want time on your side. There's a 12/31 shot clock. You have to have it done by then. So what opportunities exist? What areas do we have to plan around? So having more time just helps with all that.
So I know tax planning, we kind of talk about it a lot, but it is important because it really gives you that heads up. So that's good. All right. As we kind of talk through, I just want to shift a little bit to kind of give more reasons of why this is important. Another thing is through 2025, taxes right now, tax brackets are wider and tax rates are lower than they will be after 2025. So basically everything goes back to old tax rates pre-2017 after 2025. So for the next 3 years, taxes are on sale, right? Basically.
Yeah. Exactly.
Okay. So this is kind of why tax planning, while we talk about it in a 1 year, so we just kind of mentioned here's how to do it over like planning for this year if you've got changes. But really when we're talking about it, we're also talking about it on a longer term scale. So maybe just talk about that a little bit.
Yeah, so what you refer to is we're currently in the Tax Cuts and Jobs Act. So something that came into effect during Trump's presidency. We have reduced rates, wider brackets. That's all set to sunset or revert back to old law, which is the 2017, the Bush tax cuts, after 2025, so in the year 2026. So, right, yeah, we're at lower rates than we have been and expect to be under current law unless something changes. So as long as we know what rates will be, we should take advantage of that. So that's kind of looking not only at this year, 2023, but in the future, 24, 25. What do we know we can take advantage of before rates will increase?
Yeah, that's great. Okay, so walk us through kind of an example of how people would see this impact them. Someone who's nearing retirement, maybe like this year, and this is why we kind of have the client like segments that we target, that we do, because there's a lot of transition. There's a lot of options or opportunities for people to save money. So that's why. And so someone nearing retirement, let's say here in 2023, someone's going to be retiring or in the next couple of years. Walk us through like that person, some of the things just to be thoughtful of and like really how they kind of take advantage or think about over the next 3 years, kind of this longer tax planning. What are some things that you think of?
Yeah, so knowing that we're at lower rates, some things that we would want to do would be to do Roth conversions, meaning move money from pre-tax accounts like a traditional IRA to a Roth IRA or an after-tax account. Because we're at lower rates, we're going to be experiencing that at lower tax, a lower tax liability than we would 26 and on. Some ways, if they're thinking they're going to be retiring in the future, so they're at some of their higher brackets now, it would be doing things like a donor advised fund or donating appreciated stock or even giving the qualified charitable distributions out of their IRAs, looking for ways to decrease their taxes now, knowing that they'll be at lower rates in the future because of retirement.
No, that's helpful because I think just seeing this longer term picture. So when we're doing financial planning, tax planning is one piece of it. So we always start with like, what is it that you're trying to achieve? And some of these assumptions that we have to use, we have to talk through, well, how long do you expect to live? And there's so much that goes into these assumptions. But this is where we're saying, what are things you do now, kind of nearing retirement versus later when you're in retirement or some of past 70 and a half or when RMD starts. So I think everything you're mentioning is super helpful.
Well, I think internally for us when we're doing tax planning, the client sees it when we're presenting it, but we're thinking not only 1 year out, but we're thinking even a decade out, 10 years.
Yes.
And what's happening in between there? What's the date on the calendar versus what is their age versus what are some things that are going to trigger because of their birth dates?
Yeah.
Maybe it's age 65 with Medicare or age 66 or 70 for Social Security, age 72 now for RMDs. There's a lot of trigger events because of birth dates, but then also trigger events because of I'm retiring or I'm going half-time or we have this change in our life. We're moving to a different tax location.
Yeah.
We're looking at it not only on an annual basis, a 1 year basis even, but multiple year.
Yeah. One thing I'm noticing too is I feel like a lot of legislation, there's ranges of ages. So I think this is where some of the complexity comes in is, it used to be RMD started at 70 and a half, then 72. And now it's this range of, depending on when you were born, that fluctuates.
Maybe 73, maybe 75 in the future. Who knows?
Exactly. And then also Medicare it can start at 65, depending if you're still working. When do you start
And
that
what
or
is
health
employer's
insurance?
rules and all of that.
Right. Then Social Security, I can take it as early as 62, just normal retirement benefits, but at the latest 70. So you have these ranges of ages, and that's really where this complexity comes in is, well, what's the best time for me?
So those complexities, those things that make the situation complex is why people don't want to deal with taxes. They don't want to think about it. They just ignore it sometimes. And that's where they're missing out on some huge opportunities where we're able to at least make the complex simple in the sense of here's options and here's what we'd recommend. Here's door 1, 2, or 3. Which one do you want to walk through? So when we're doing tax planning, we're considering all of that. And it impacts, not only does tax planning impact the tax return or taxes, but it's impacting insurance. And how is Trevor going to help them with insurance? It's going to impact their investments. How is Rob going to help them and make sure that their investments are handling their cash needs appropriately, not only now and in retirement. It's going to affect the estate planning, which you help them with. What should they be doing? Who should the beneficiaries be? Who should be getting those accounts? All of that. Like tax planning touches all of those. So therefore I'm involved with a lot, but that's what makes it fun. It's usually a puzzle, and how do you put all the pieces in place in the right way?
Yeah. I'm finding myself overwhelmed. I'm like, wait, that's a lot to think through. And yet we just came off of an hour-long call with a client, which was amazing. They're nearing retirement, but won't retire for a couple years. However, the retirement plan is being put into place now. And so like that, may look like moving out of state. Okay, well, where are we living? What are we going to do? How long, do we stay in our house? Do we sell sooner than we thought? Things like this. And it's so fun to have these conversations, but I find myself, even as we're talking, we talk about these things and we're saying like these things are not set in stone. So while we say in the plan, well, we're going to plan for this Social Security, yours to start at this age, yours to start at this different age, that could all change. And
you can get, kind of using a football analogy, you get to the line, you call an audible. Like there's been a plan, but the plan changes.
Exactly. And some even like steps in the plan. That's why it's starting sooner. It's like some pieces of the plan happen before to ultimately reach the goal that they want. It's okay, well, we need to do this now then. And then by the time we retire, that's in place. So then we can do this. It's just like the timing.
But the certain things that don't change are your age and the date on the calendar. Like those are two constants, especially with taxes that impact everything else.
Yes. No, these are great reminders. I just feel like this is the complexity. And I mean, but this is where it's like, okay, you want to move out of state. Now, do we need to get a mortgage? Do we just pay that cash out of our portfolio? I mean, in addition to all the things you just mentioned, and those things impact this, and to where we're saying things like, well, you have to think, normally we think about a mortgage as like, we're going to get it, we're going to hold it for the 30 years or 15 years. But it's like, well, wait, this is going to become a year by year decision.
Yeah, you could,
right?
But is it the right decision? Yeah. So I was thinking as you were talking about that, we had a number of new clients this year. So we grew like double digits without any type of marketing.
Right.
And when I was taking that first phone call from the client, almost always I'll hear the comment from them, well, my situation's pretty easy. It's simple. There's nothing complex. We just gave you half a dozen, maybe a dozen reasons on why it could be complex and why it probably is. So yes, just because your return doesn't have a lot of pages or a lot of ink on those pages, that doesn't mean it's not complex.
Yeah. No, I remember some of those phone calls too, where it's kind of like you take them and you're like, yeah, we'll just describe, because we're trying to give you an idea of what it would cost, to do tax preparation for people who are new clients. And so a lot of times we want to look at that last year's return because we want to make sure we can see there's so much information on a tax return that you can get. And so it's really saying, okay, let's see last year's tax return. So then we can actually see what's going on. It gives us context
for everything that conversation needs to probably touch on.
Exactly. And so that's really where we start there, but then, it's the other things where, we're doing this and this and this. And those are the things that then change it from what was on there last year.
We want to do this and this.
Exactly.
And this.
Yeah. And so that's the stuff why, you're starting to get this picture for why this planning, this financial planning, tax planning, why it matters. And so this is the stuff where even this person, we had one client who you went to file their return, but a return had already been filed for them. So whether this was accidental or, mischievous, we don't know. But just walking them through, okay, here's then what we need to do. Now, going through that process, you need to paper file the return instead of electronically file it. Had it been a big refund that they depend on, I think some people use that refund to actually fund a vacation or something for the summer. They kind of use it as a forced savings. Yep. But it's like, now imagine that money. Now we have to paper file, and that's just going to extend out when you're going to receive it, basically. Yeah. But like, this is the stuff that you're protecting yourself from, all by doing the planning ahead of time.
Yeah. So when I think Jake probably alluded to this a couple weeks ago.
Yeah.
The size of the refund isn't necessarily mean you have good or bad tax planning.
Yeah.
Or you're in a good or bad tax situation. It just kind of, it is what it is. It's the facts and circumstances.
Yeah.
When we're doing tax planning for clients, we're trying to get that to as close to zero as possible, meaning they haven't overpaid. We're not loaning the government their money for free.
Yeah.
So getting that client as close to zero as possible is ideal. And in this case, that's what happened with the client you were alluding to, where when we e-filed their tax return, we got a rejection notice saying that there was already a return on file for them. Someone had either accidentally or on purpose used their Social Security number.
Yep.
So we're now filing that return by paper. It's going to be reviewed by the IRS to see which one is the actual client. So if they had a refund, if they had a large refund, maybe thousands of dollars or tens of thousands, that's going to be locked up for who knows how long. 6 weeks, 8 weeks, a couple months. Like, they won't get that until the IRS essentially releases it.
Yeah.
So when we're doing tax planning, we're saying, let's not have these refunds locked up. Let's not wait to file the return to get your money back. Let's keep it in your pocket. Let's not loan it out. And in this case, with this client, we're going to set up identity pins. So basically, the IRS will issue a new pin each year that needs to be entered before the return's filed, stopping anyone else from filing on their behalf.
Yeah. And mostly, like, when we do have an issue or when we see an issue that's important, like, for those people to use those. In any case, would you say, like, that's helpful if people want to go through that process? Is there a pro or con against it?
Yeah. So I've thought about it for ourselves. We don't have it in place, but could we? Sure. It's just one extra thing that we have to collect every year because it changes. But for clients that have large refunds year after year, they don't want to adjust their withholdings. They're sitting on multiple $1,000 refund and they're late to file, meaning they're not filing February, March. Yeah, absolutely.
Yeah, because even people that do their own return, same thing. If you find yourself getting large refunds, that's something helpful for you. No, that's good. I also wanted to mention, so you mentioned kind of like this long-term tax planning. We do have kind of like a case study video on YouTube where we kind of just walk you through just on the screen, just really briefly, what this looks like when we're actually kind of doing it over long range, and you can see the impact. So just want to point you to that. Again, all of these things will be in the show notes, but there's just so much stuff you can see. But I think, we're at least helping people to understand, well, when do I fit into the category of when I need tax planning or just financial planning in general? I need to have a plan. And then also I was thinking, like, we just did a video this week where we were talking about inherited IRA distributions. And I think something else we're noticing is just people inheriting money, so inheriting qualified retirement accounts. And so that, even in itself, those might have money that start coming out day one that you have to pay tax on when you're in your highest income earning years. And so you throw all of these things into the mix, and it just gives you a really clear reason of why it's important to have a plan and just know what's happening for today and the future. No, it's good. Anything else that you kind of want to remind us of, or that you feel like is important to know from tax season? Or
I'd say tax planning is probably what I enjoy the most because you have the most impact over. Tax returns is a seasonal thing. It's compliance filing. You have to do it. You have to summarize what activity happened. Tax planning allows you to change that. So when we're doing that, we're figuring it out August, September, October to impact what's happening the next February, March, April.
No, that's great. All right. This has been really helpful. Thanks for joining us, Steve.
You're welcome.
I know, short notice. And I know you love, just like jumping right out of tax season and now into this, but I know we also enjoy talking about the analysis of how did it go? What did we notice? So that's all really enjoyable. So fun conversations at home. That's what this is like for us in reality, right?
We've had this conversation so many times.
A few times.
Now we're just recording it.
Right. As we're driving, we've talked, you've been reading me your notes, and then, even as we were talking about this last night, okay, what are things? And so, these are constant conversations. And I think what's fun is when we hear new changes to legislation or things like this that we see, it just makes us, all of our clients that we work with, these are the things that literally when, a new strategy or a change to a strategy is something that we realize, we think of those people right away. Like we know our client situations. And so when something comes up, we're saying, oh, we need to reach out to them, or this might change their plan. Let's run the numbers, or this is something we just want to put on their radar. So even if you don't feel like there's a lot of things that are happening now because you're in year 1 of retirement or year 2, it doesn't mean that there's not going to be a lot of planning that's going to come up over the next several years. And so these are the things that are really exciting for me and for us as we talk with clients. This is the stuff we love, and planning and just seeing how it's working out to get them the cash they need and how it comes from all this planning that they've done. So it's just really rewarding, really cool to see.
Yeah,
so.
Complexity doesn't scare us. We actually look forward to that because that's where you kind of make sense out of the chaos or mess.
Yeah. Okay, so one final question for tax season. What is the thing you hate most about tax season?
What do I hate most?
I know the answer, but...
It's giving bad news. I'll humbly say usually it's not my fault. There's probably been a few times where I've had to explain the situation, but oftentimes it's you under withheld or you had a change that you didn't realize was taxable. Here's the balance due. And I there's no easy way to say that, and there's no way to sugarcoat it. It's just it's often here's the situation, how are we dealing with it? Here's some options. Yeah. And take it from there.
Yeah, no, I just figured people would want to know what is it you hate most. And that because you want to give people good news. You want to do a good job. We want clients to have a good experience. So, yeah. All right. Well, thanks for joining us. This is really helpful to know that taxes are on sale for the next 3 years. So if we haven't convinced you yet that you need to start doing tax planning, now is the time. Feel free to reach out. You can take a look at our tax planning page on our website. Along with financial planning, we describe all of those services in detail. So thanks so much for listening, and we'll talk to you on our next episode.
Thanks for listening. To find any links or resources related to this episode, check out our show notes. Your host was Michelle Smallenberger, a certified financial planner and CEO. The guests featured are from Financial Design Studio, a team of experienced fiduciary, fee-only advisors based in Chicago. Anna Lewis is the executive producer of the Behind the Designs podcast. And as always, for more information about Financial Design Studio and who we are, check out our website, financialdesignstudio.com. And final note, no content discussed on this podcast should be taken as financial advice. Financial Design Studio accepts no responsibility for your individual choices. We'll see you in the next episode.